Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 225 of the AJ Brown Show. Today is February 27th, the last day of February 2026. We've got a down market, and with me, as always, the main man of the hour, Mr. AJ Brown. How are we feeling today?
I mean, down today. 2 days ago we were up. 5 days ago we were down. Have to talk about this consolidation pattern.
I feel like that's the story, right? The last couple of episodes, we've been either up to start the week, down to end the week, and kind of still leveling out. I'm gonna go ahead and pull up your S&P just to kind of see where we're still kind of in that mid range. And what's your takeaway with that? I mean, how long can we continue to stay consolidated?
Well, and this is the name of the game this week. And it's interesting because it's almost like we're having to look back. We can't tell how we're feeling in the moment as investors. We have to look back at what happened over the last 24 hours and kind of piece it together, if not almost reverse engineer. Like, for instance, on Monday we had a down day, right? That's this red arrow that you see that my circle on. Let me zoom in a little bit, Sip, so that people can see a little bit better if they're looking at my shared screen here. So yeah, Monday we had a down day, and at the end of the day they're like, "Oh, people are responding to Donald Trump's frustration with the Supreme Court ruling the prior week, and they're dealing with the fact that he's threatening to put on across the board tariffs of 15% on every country using a different law, which of course would upset investors." And then there was some bargain buying on Tuesday and continued bargain buying. That just means that, investors were like, "Oh, we had a dip the prior day, and that was more of an emotional response dip. So this is a current low, and I'm going to start buying." And so they bought on Tuesday, they bought on Wednesday. And then yesterday, interestingly enough, you could see this funny bar where you've got a much lower low than where we closed. So there was an initial reaction of negativity yesterday, almost like profit taking, only to have the bulls come back and bring it up a little bit. Not all the way back up. This wasn't what we call an upside down Lincoln's hat, which would be kind of uh, a pattern, a bar pattern that would hint at continued resiliency or strength, rather just a little bit of resiliency. And then of course today we gap down, but again we're already at uh you know past the session's bottom for now, and we're back up above the open even though we're not above the previous day close. So this isn't really a key reversal up pattern, but in other words, that's a lot of words to say that you know investors don't know what the heck is going on. And if we take a look at some of the volume in the markets, the volumes died down. This overall pattern we've seen in the past, this is a pattern of investors, for the most part, sitting on their hands, right? And we can see in other areas of the market, which we'll look at pretty soon, like precious metals and options. We'll look at the VIX. They're out there kind of protecting themselves by buying gold, buying real assets, buying insurance uh, policies in the form of derivatives like hedges, like the options market. And in the meantime, they're sitting on their hands, kind of building pressure in the main markets, not really knowing what to do. The rules are changing every day. There's nothing that can be looked at as predictable patterns. So investors are in this weird area where they're sitting on their hands waiting for some clear understanding of whether they should be buying or selling.
Yeah, and we had the State of the Union, which isn't a market mover, but it always gets people talking about policy and some of those things you mentioned. And then this morning we're getting some, I guess, decent inflation data, which we haven't had as consistent over the past couple of months. And I don't know if you got a chance to look at that, but I think that's the storyline of today's little morning drop.
Yeah, so what SIP's talking about is this thing called Producers Price Index Final Demand. This is a measurement, everybody, of wholesale inflation. So it's in the supply chain. It's what the inflation that businesses are reporting they're seeing on that their end, not necessarily if they're going to pass it on or absorb it to the consumer. We'll see consumer price index early next week. This is for January, and when you look at the overall numbers, they're slightly ticking higher than what they were before and definitely higher than what was expected. Um, the annual number actually was a little bit lower, but remember the annual number is looking back 12 months. And a lot of times, especially when, the environment is so uncertain, what economists and what investors are doing is they're taking the monthly number and they're multiplying by 12 to get an idea of what it's going to be in the future. So if you take that point 0.5 and multiply by 12, you get 3%, which is a little bit higher than what we would want. It's higher than what we've been seeing. And then, a lot of times, folks, investors, and economists, they like to factor out the more volatile food and energy out of inflation numbers because food and energy tend to be, whipsawing all over the place all the time, even in calm times. And so they take that out. And so you get more of uh, um, a raw number that isn't being whipsawed around. But now, if you do that, gosh, that number's way high, way higher than expected, way higher than prior, and 0.8 times 12, what is that? That's not good. Um, that's a high number, right? 0.8 times 12, I think that's what, 8%, 9.6% for an annual inflation if we stay at zero point 0.8 for that's definitely scary folks, right? Having inflate that means that the Fed is going to want to raise interest rates to calm that down. Of course, then we get back to this number. And one more thing that they like to look at is they like to factor out trade services from this number because sometimes trade services is its own thing. That's, you know, not the inflation of goods, but the inflation of actual services provided B2B. And so that number gets a little bit more tame. I'll be honest, the Fed looks at their, personal consumption expenditures index more than they look at this, but this isn't boding well for interest rate drops in the upcoming sessions. I think if we look at interest rate drops, they're getting pushed all the way out to July. Do you want to look at that next sip?
I figured that's kind of where what I was thinking, where it's like, this makes it very unlikely to get another cut anytime soon. Is kind of my initial thought when I see some of that data.
Yeah, and it would be interesting to look at those predictive markets that we've been talking about, the
Look
Kalshi
that
and
up.
I can never remember the second one, the one that you always reference.
Poly market.
But those are the two.
Yeah.
Poly market. Those are the two. But this is the tool that's been around forever. This is the CME FedWatch tool where they are surveying actual, investors out on the floor about the upcoming numbers. And you can see for this upcoming March, we're about to be in March. So March 18th, we'll get another Fed meeting. This is 96% chance that, they're not going to touch interest rates. And that's up from 95%. It's about the same as a week ago and much, much higher than what it was a month ago. This is actually an interesting tool because this is a predictive market or a predictive measurement that these guys have been running for, gosh, over a decade. Of course, there's no betting on. That's the difference between predictive markets, like Kalshi and Polymarket, versus this is that this is just a survey, whereas that is people actually putting money out on the line. I want to
Well,
also
I have a
throw
stat.
our
I have a
attention on.
stat for you. I have a stat for you. I have a stat for you on what
Do it.
Polymarket's saying. It's a
Yeah.
2% chance of a cut with 181 million dollars in volume.
Yeah. And then April 29, the CME FedWatch tool is still, 80.2% for no cut, under 20% for a cut. So there's that. But here's the one, March and April is still under Jerome Powell. And it is the Fed, even under Jerome Powell, is very much, still a Democratic group where all the Fed presidents from the different regions get together. There's a set of, assigned governors who are actually, everybody gets to put their 2 cents in, but then there's a handful of governors that actually vote on policy decision, and they're kind of very much robots. And so they are very reactive when they have to be, if there's a consensus. So even under Jerome Powell, he may have some influence, but it's not as much influence as you would think if reading the headlines. It's more of a kind of a figurehead influence, not an actual voting influence. And so, the March 18th, April 29th sessions are still under his guise. And so we would expect, because he's already made it kind of clear that there wouldn't be any sort of interest rate drops. But come June 17th, and here's the interesting point of data for us. Come June 17th, we're going to have a new Fed president, Keith, the one that Donald Trump said that he's going to nominate. Of course, the Senate, who still very much is under control of the same party that Donald Trump is, but more and more voices in the Senate are starting to step up and kind of, advocate for calm rather than constant confusion, which is where Donald Trump seems to like his administration to live. So I don't know if his Fed president nominee will actually, face any scrutiny and ultimately, not get agreed upon, or if they'll pass him through like they did Jerome Powell a while ago. But this is the one that's a big eye opener for me. Investors don't even think under a new person. Right now, they're not giving a majority to a rate drop in June. And this is newer, right? This is new that they actually think even a new Fed president won't be dropping rates in June. Now they've pushed the first rate drop to July. I don't know if the predictive markets have something out there for the June meeting, but that would be interesting what the predictive marks are saying about June 17.
I'm sensing like a
Federal
4 to
Reserve
5% spread between the two is kind of what I'm gauging.
So FedWatch says more of a 8% spread between the two, if I'm reading that right. And the predictive markets are saying it's kind of almost close to 50-50, a little bit leaning towards no change. Is that what I understand?
No, I'm just saying that the predictive markets are usually reasonably close to whatever this is, within like 4 to 5 basis points, right? That's kind of
Got it.
I don't see it that far out, but I'm sure it exists.
Yeah. I noticed as well that the Fed kind of paused on their quantitative easing, quantitative tightening. What that tells me is that even the Fed, just like we see in the S&P where they're stalling, not knowing whether to buy or sell, this is telling me the same thing, that even the Fed, the most important banking industry in the world, who is buying and selling treasury bonds is a little bit in a holding pattern as well. They don't know whether to do quantitative easing or quantitative tightening right now. They're kind of sitting, everybody is sitting on their hands, and huge consolidation patterns in quite a few charts, except for instance, our gold chart. When in doubt, when to hedge against the uncertainty, they start putting their money. We're almost back at, that spike of all-time highs at 5,300. Well, we're at 5,270. So people are back buying gold. People are back buying silver. This silver one just gosh darn perplexes me, Sip. But, we had that run up in the silver price, and we were thinking to ourselves, God, how can you have $115 price of silver when silver is usually around, $25, $30? And so it dropped back down on profit taking, but it dropped down to about $80. It's back up at $95. My mind is blown that silver is getting this much attention, unless it's not just the big guys, but now it's the little guys who are also worried about the future, and they can't afford gold ounces, so they're buying silver ounces. I don't know, but this is just insane. Bitcoin is about flat, and even oil. Everybody's all excited about low gas prices, but I'm telling you, oil is creep up. Oil for the longest time, this looked up to 6-month highs here. Oil for the longest time was trading at $57, $60. Oil companies were wondering whether to drill or not. Well, now 68. When it gets above 70, that means most of the oil companies have their working. They're still wondering whether to drill. When it gets up $580, you'll start hearing about petroleum companies looking for new sites to sell because it makes it worth it. So you're even seeing oil prices go up. It's an interesting time where investors are finally saying, I don't know what's going to happen next. I can't even subscribe to one hypothesis or another.
I'm curious on your take with some of the housing numbers, because I keep seeing tweets and stats about the housing industry. People can't sell their houses. Mortgage rates have really come down for the lowest level in like 18 months, with a trajectory to the downside.
Yeah.
Could housing have some sort of a play? Because I know that this morning we were working on that coil thing, and I don't know if you want to bring that up, but as I'm watching you go through the markets, I sense the coil building up. And I know in the past we've talked about it could spring in some way, and I'm curious what could be a catalyst, because there's so many, but housing is one of those that's like the sinking, like the big ship, the big tanker. I don't know if you're seeing the headlines, but I'm seeing them all over the place.
Yeah, housing is an interesting topic because housing, especially here in the States, for the longest time, we got behind in building housing. And then also regulations were removed that allowed corporations to come in and beat out individual, kind of like what you've been hearing in the farming industry, how a lot of the mom and pop farms, it doesn't make sense anymore. So they're all being bought up, and there's like 5 major farming companies that all of our food comes from. Well, there's big investors coming in who are now the big folks behind the rental market versus individual mom and pop landlords. And there's that supply problem. But at the same time, right now, like in the last 2 weeks, and what you're referring to is, a house, if even you can afford one now, which they are saying that on the median income in the United States, people can't actually afford to buy a single family home anymore, which is a big problem. But if you could afford one, what we're seeing right now in the last, say, month or month and a half is people don't want to, because it's a commitment. It's like a anywhere from a 15 to usually a 30-year commitment, and people have just, you keep hearing that foreign investors are pulling their money out of the U.S. Treasury market. You're hearing that everybody is losing their faith, right? And that's the worst thing to have happen to a currency, because most currencies, in fact, just about all currencies, are based on the good reputation of the society that currency predominantly is being traded on, right? So the U.S. dollar is based on the faith of the United States entity, including its government, including the people, especially a democratic one. So what you're understanding is there's a lack of faith in the United States, the currency, the housing market. There's just so much uncertainty that folks aren't even with they're lowering mortgage rates, trying to get people interested in buying the house, and people are like, I don't know if I want to commit to the next 30 years, right? That's a big purchase, it's a big decision, and people are like, I don't know what the dollar's going to do, I don't know what my living arrangement's going to be, I don't know what AI is going to do to my job. I don't want to commit to having an expense for the next 30 years, even at this low rate, even with people lowering their prices of houses. If the housing market starts to crash, sip, that's going to be another nail in the coffin.
Yeah, and it's I wonder if the interest rate debate has an effect, but I think you're right that it's more societal changes nowadays that are not so predictable, right? It's like
Yeah.
human habits are changing, and I guess
Yeah.
if housing prices come down too quick, because that is what would happen for people that need to sell their homes, that wouldn't necessarily feel like a 2008 crash. It would just be more of a slow burn.
I
I don't
hope it's a slow burn. I don't know. We're in so much uncharted territory right now of things that we really can't even look at history to give us answers to. I mean, maybe you can go back to the great crash of 1929, but there's so many variables that have changed in just the last 15 months out of the norm that especially me, I'm like a pattern trader. What pattern do I refer to get insights about what the future holds? I don't know. I can show you. Let's bring up. Do you want me to bring it up, or can you bring it up? That infographic that I created.
I could try to pull it up here. But I do think the VIX conversation
Okay, yeah,
may
let's talk
maybe
about the
may be
VIX.
good because it's like you have a strategy that's not necessarily solely based on a pattern, and that's kind of what you have to do in these uncharted times.
Yeah, the VIX is creeping up. So, the strategy we have that I like to use, the hedging strategy, is not one that I would employ right now. And the reason is, we like to employ the hedging strategy when the VIX is at the bottom. I had a very good trading mentor of mine about 15 years ago that said, we trade in times of peace, not in times of war. If you're putting the hex strategy on right now when the VIX strategy on when the VIX is at its high, you're trading in a time of war. You're trying to buy high and hoping it goes higher. We like to buy low and then sell high, right? Not buy high and try to sell higher. That doesn't make sense. So right now, we're not going to suggest to anybody to put on our VIX hedging strategy as we've defined. We want the VIX to come back to a calm area and give us a bottom signal when it's trading around 14, 15. And don't worry, on this show, or I mean, for those of you that are tuning in that are part of my program, we're going to be giving you, in fact, we've got a new tool that's being rolled out that will actually give you a barometer and even suggest the vertical spreads, strike prices, and the expiration dates, the actual trade that might be the best for that. But right now is not that time. However, when the VIX is this high, what does it mean? Well, the VIX is a measurement of the price of options that have been pushed up because there's such a demand. And so we hinted at that earlier. We hinted that investors are really uncertain, they're scared, they don't know what their positions are going to do. And so they're buying these options to protect against reversals, right? If they're long a position, they're going to buy some protective put options so that if the underlying symbol goes down, the protective put protects them. And if they're short positions, there's a lot of people who are actually betting against the market. If they're short positions, they'll buy protective calls to protect just in case the market shows resilience and starts continuing to go up. Their protective call will offset any losses in their short position. So, what we're seeing here is people are buying in real big chunks, these protective puts and calls, and they're driving the price of the options up. And so the VIX is higher. So the strategy we want to use if people are paying top dollar for these protective options is we want to get into the business of selling those protective options, right? We want to sell those protective options while people are paying high prices, and then we'll go ahead and close those positions, buy to close those positions once people are not as worried in the future and are willing to, buy them back at a lower price. So it's kind of like we want to short options. We want to sell options to those people. So yeah, we have to get into diagonals where the front month is the option we're selling, or we want to get into covered calls, covered puts, where again, we're selling those call and put options to those option traders, the ones that are willing to pay top dollar. So that's the strategy I've been talking about in my program is we're selling these options. We want to be in positions to sell these options right now to everybody who will buy them.
And there's still some value in some of these long-term plays, right? Even if you're like a long-term investor and you're seeing it consolidate, that's kind of one of those simple covered call strategies where it's like I can still make a little bit of money on these insurance contracts. I did get this coil diagram up, AJ. If
Yeah.
there's any question into what we
Yeah.
were talking about there,
Oh,
where
yes.
like, there we go.
Yeah. So this is how I threw this together this morning. I've been preaching about this all week to my program participants, right? And you've got to understand exactly what's happening, and that spring that I threw in there totally explains it. There's different types of consolidation patterns, and we want to trade them differently. There's the sideways, the one up in there, the horizontal ranges. um, those are the ones we want to sell the premium into, so we're looking for those. But in the S&P 500, you'll see down there under the three triangle patterns, that's what we're seeing. That kind of consolidation is investors at the moment sitting on their hands. And if you can think about it, you can see the coil principle, building potential energy. Generally, the longer you are in these patterns where investors aren't sure whether to buy or sell, especially those three triangle patterns that you see over there, when you are in that period, for the longer you're in that period where investors are so uncertain, they're just sitting on their hands, and in the background they're buying options and they're moving their assets to gold and things like that, the bigger the breakout once you get to the end of that pattern will be. It's kind of like the longer you're in there, the stronger you're compressing that spring, the stronger, because think about it, you don't know what to do with this hard-earned money you've made. You know that saving it in a savings account isn't going to do anything. So you want to know, should I be buying or should I be shorting the market? And there's no clear sign, and there's nothing in history that you can refer to give you any insights. So you don't know what to do. So you put your money on hold, or you put your money into a position and you buy your protective options and you sit on your hands waiting for information. And every day the information is neither buy or sell. It's always like just little tidbits that, you could react to. But for the most part, you're just sitting there waiting and waiting. And as you can imagine, if you make somebody wait a long time and that spring compresses, they start to get anxious. Whereas, at the beginning of this period of time, if you told them a little something, they'd probably blow it off. It wouldn't be that important. But if you make them wait with no information, the littlest tidbit of information released through the media or released through social media, released through Truth Social, released through X, that 3 weeks earlier you would have ignored as just silliness. It's that little tinder thrown into a bunch of a big pile of oily rags, and it catches fire. It causes that spring to finally, all that anxiety to release, and people will either start buying or they'll start selling. We don't know, but it causes a breakout, right? So when we see that consolidation pattern, we want to start thinking about how to profit in a breakout, whether it goes up or down. So there's option strategies we could think about, like, for instance, a straddle or strangle, or we could think about setting up some automatic trading bots that can work on, in the lower right hand corner where I've got execution strategies. I've got a couple of different strategies down there that you can use in order to trade the breakout. But this is the infographic I created for my program. I just wanted to show it if people want to take a screenshot or something like that. But this is what I give my program participants, something like this, to help them understand what the heck is happening right now in the broad market. And we're seeing it in many of the sectors too.
Yeah, and fortunately for the community and your strategy is you look at a lot of variety of names and a lot of different sectors, and so no matter what's going on in the broad market, there are opportunities that are a little bit closer, refined with their charts, and we may go through some in the show. So while I have this up, let's go ahead and give everybody access to AJ's quick links. So a lot of those things that AJ was talking about, you can find here. The link is in the chat. We've got some socials. We've got the free indicator suite, which AJ will have up in some of his examples. And if you're new to premium selling or options trading, or you just want to get a leg up on what to do in this market, sign up for this free workshop, this daily workshop to get you going on some premium selling. And then, come and see how you can become part of the program. And then if you need some custom coaching, AJ's got that for you here. I know AJ and the team are working on some cool stuff on the back end. So all the links to that are there. AJ,
can I ask a favor of everybody, Sip? If you guys don't mind either typing into the chat, or if you're watching this show or the clips of this show in one of the replays that we post, would you let me know in the comments if having some of these infographics available to you, if you sign up for the free indicators, or you sign up for the free stuff, the other freebies, if having something like this that you could download and have by your computer would be useful. Because I don't mind, but I don't want to put it out there for anybody that's not interested. So I'd love to see some comments, plus comments in our replays, especially, help the YouTube algorithm, help other people find our show. So that would be good too. So give us a little comment of, would this be useful, or do you think it's not something you guys need a hold of? That would be really helpful.
Awesome. Throw that in the comment. Also, we have about 30 minutes left in the show. So we've got AJ's pick of the week. We've got our speed round. And if you guys have any questions, feel free to throw them into the chat. I'm looking through my
Waymo.
Yeah, I saw a video. We've been talking about AI. We'll keep the morning sip pretty short here, but I'm not sure if you're seeing any Waymos, but like I'm seeing a ton of them around me. I mean, I will literally be on a block with like 5 of them, and so sometimes I find myself sitting there and just asking myself, I wonder what's going to happen. I wonder if the 2 robots are going to figure it out. So this is a video that's going viral from somewhere about that interaction between the robots. And so
Oh no!
Is it?
That one guy totally
Is he
retreated.
parking?
Oh no! Now this guy's gonna retreat.
Then we have a human.
Oh no!
Another human.
Oh
Oh,
no! Oh, oh no! And there's one coming up behind. They're sandwiching in that poor guy. Sip! And that one guy in the parking was like, "I'm out." Oh, the bicycle.
we got.
Oh, those poor robots are getting so overwhelmed in their input.
Oh, they figured it out.
Oh,
Oh, worked itself out.
except that third guy. Oh,
Yeah, so I thought that was interesting. Did you?
I heard. So I got to tell you, things are weird here in Washington D.C. Like for instance, about a month ago, and I try to actually. I live about what 20 miles as the crow flies to the center of Washington D.C. But I don't think I go there maybe once a week. But you know, the roads get closed at a moment's notice, usually when there's a dignitary in town or something like that. And lately, it's been more often than I've ever noticed since I've lived here. So, uh, but I've heard that we had some Waymos here, but then I think it was coming down. Remember, Washington, D.C. isn't actually, even though it's supposedly under control of its mayor, it's actually also under control by the federal government and ultimately the president. And I think that Donald Trump was like, no, no, no Waymos in here. So we haven't had them. But I heard as well that they're paying Uber Eats drivers because somebody who rides in a Waymo, if they don't close the door right when they leave the car, that the Waymos won't drive. And so they're paying Uber Eats drivers to go and shut the doors behind customers that forget to close the doors well on the Waymos. Is that a story or am I making that up?
It's possible, but they are pretty nice Jags, so I don't see the door being propped open being like an ongoing
Oh,
issue.
I heard that in some cities, like the person will leave the car and not close the door all the way, like leave it ajar, and then the car won't go, so they have to pay $7 to an Uber Eats driver to swing by and just close the door well, so that the car could take off again.
I mean, every day, AJ, it's just AI and AI and AI, and you and I are just
You just got to work out the bugs.
trying to
That's
keep
all.
up with it. And yeah, that's interesting. We'll keep an eye on that. Waymo is definitely something that
I,
we'll continue to bring up in time.
I there's always a way that you have to, just like people always were bummed out when you'd get a version of Windows and then somebody would do something that would push the envelope and they'd realize they have to fix the bug. And so they'd send a new update out. That's it. You've got three Waymos cornering real drivers in. You just got to send out a bug fix and then
I did
let it
I
run.
did see one in real time where it was trying to turn left, but there was 2 fire trucks. So it literally sat through, like,
Oh
4
no.
lights, and then I see the door open, and the lady walks out and closes it, walks away, and I was like, "Well, that was the solution, was she had to get out the car, and the Waymo had to go the other way." But I'm honking, and I'm in my mind, I'm like, "Does the Waymo hear my honk? If not, it really should. Like, it should know we are upset with this protocol."
Yeah.
Uh
That's funny.
All right, folks. We're gonna take a break. We'll be back to AJ's pick of the week. We've got some cool names to run through to see if we can get some setups, and with that, we'll be back in a jiffy. So sit tight, folks.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
AJ, can you believe it was 82 degrees by me yesterday?
I mean, it's been like 55 degrees here. We're finally seeing the snow melt that we've been under going away. So I can imagine you're 82. That's dreamy, isn't it?
It's almost doesn't feel
I
real to
feel
me
like that's the
sometimes.
perfect temperature too. Like, mid 80s is where if it's above that, it's a little too hot. But if it's below that, I like mid 80s.
I'm trying to fight not turning the AC on, like, just open up a window, catch a breeze.
That's all. That's all.
All right, AJ, let's go ahead and see if we could use some of these amazing strategies that you and the team put together. Unless you want to run through the rainbow chart here real quick before we go
I
into your
mean, the
pick of
only
the
thing
week.
I wanted people to see exactly that consolidation pattern. You could see our rainbow chart just really quick. The center zones, I mean, we're basically sideways channeling. The center zones are almost in perfect alignment. But if you look at what's happening, and now it's starting to become a pattern where we've got two tests of support, two tests of resistance. We're about to get confirmed that this is a new top. It might happen actually at the close of today. Here's our consolidation pattern, somewhere on the 6,890 or 6,900 mark is where our pivot point is coming in. And then, something's going to happen. There's going to be something that you would otherwise ignore. Something's going to happen that's going to cause investors to think that they have to either start buying or start selling. But we're seeing that pressure build up, that spring compress. And the longer we compress it, the tighter we compress it, the bigger it's going to pop. And that's what we're looking forward to. Watch out for all of you who are in range bound option trading strategies or in directional position. I should say directional positions. If you're calculated wrong and the market bounces in the opposite direction and you're in a correlated symbol that bounces with it, yeah, you got to either hedge yourself or get into a cash position.
And I don't know if you saw the news overnight, but the Iranians really called out Donald Trump and said they wanted to assassinate him. And like, I'm almost
Oh,
curious. I'm almost curious how he's going to take that, given how he reacted to the Venezuelan dictator talking in such a manner. And so that had me curious about what might go on there. All right, your pick of the week. So let's go ahead and get that ball rolling here for some opportunities. Sunrun,
well,
ticker
and
symbol
you
RUN.
so here's the scoop. I picked Sunrun last night, and I've got to say that this earnings play that occurred, they reported earnings this morning. My whole reason for following Sunrun, the hypothesis was off. I basically said, assuming everything goes well through earnings, we're going to, and so, here's the scoop. Some of you who jumped onto Sunrun with not a calendar spread, a straddle or strangle yesterday to play the possible breakout. You're winning big time right now because your put leg is profiting big time. It's probably already in the intrinsic value uh, portion of the put profiting, and the call has probably degraded, but the call can only degrade so much where the put takes over. So you're in a really good position. But the trade I was thinking of actually doesn't even fit the hypothesis anymore because of what Sunrun's doing. So yeah, Sunrun was a traditional breakout play. In fact, we could analyze, and we might not want to do it here, but we could always come back on another show, analyze the volatility buildup called the volatility rush. You can see the same exact consolidation pattern leading into this earnings, and earnings was that tinder thrown into the pile of oily rags. And in this case, we broke out down, and you can see that investors, even at this point at the noon session, haven't even decided that their reaction to the earnings was over exaggerated. You can see that as the current daily close is right at the current daily low. So this Z bar, we call it, is showing that this was a play where you would either take advantage of the volatility rush and then get out, the day before yesterday or yesterday using zero DTE type options, or this definitely isn't a volatility crush play because there's this directional movement. So the other option would be to use a straddle or strangle around the $20 zone, and then set that up yesterday or the day before, and then now let that thing ride until you could even take the call leg off at this point, and let the put ride. But also, the call is probably decayed to zero, so there's no reason to take it off at this point. In fact, you might just want to wait until you hit a bottom, take the put off, and then allow the price, because the price probably will bounce, and then take the call off when you get to your next high. But my trade that I had for my pick of the week is moot at this point because of what happened after earnings.
Hey, that's why you got to be in the mastermind call so that you can get some of the other ones that we don't bring up on the show that may have turned in the opposite direction. And it's
And I
kinda
gotta
like
say, I gotta say, Sip, that I've been telling, everybody's saying, hey, generally what you've said in the past is that you should look at like the last 8 earnings and decide. So generally what I've said in the past, even on this show, is that you come and you go back about 2 years and you look at the last 8 earnings, and you decide, how to invest in a particular stock, typically respond to earnings. Now, on this particular stock, you look at the previous earnings and you can see it's a hit or miss. It's about 50-50, where investors usually don't, 50% of the time they just blow it off. And then 50% of the time they go crazy, right? So that's why in my trade plan that I published last night for this particular stock, I said, let's see what happens during earnings. Well, obviously, investors are going off the rails right now. They're popping off. So, but you'll have folks come to me and they'll say, hey, I looked at the last 2 years, like you said. And I also usually say, for something that's seasonal, like a retailer who does better at the holiday season or something, look at specifically the earnings at the same time last year and 2 years ago and see what happens, because that could be also more representative of what's going to happen this year. And I've been telling everybody, you know what? This particular earnings season, this January, February, March of this year, 2026, there's so much unusual, unexpected stuff happening in the broad market that pretty much is affecting everything across the board. I'm not trusting, even looking back at historical earnings for even a given stock, that investors won't go hog wild, right? There's so much money that has left those big 7 stocks that we've talked about for the last 3 or 4 years. So much money has come out of those because people are a little bit afraid about leaving their money with the AI boom turning possibly, or not a matter of if, but when and by how aggressive it is, into a bust. They're taking their money and they want to know where to put it. So, even a good news earnings that might usually have been ignored in one of these value plays, all of a sudden gets a whole bunch of money. And if there's any sort of look at NVIDIA. NVIDIA reported really stellar results, and people were like, oh, that's too good for AI. And the next day they started selling off NVIDIA, despite the company doing just stellar in their P&L and stellar in their targets. They came on and they had gone gangbusters. People are like, that's not good. That's not good that they're doing good. I'm going to sell. So, I'm saying you can't trust anything this earnings season, even looking at the back. So, you never know what's going to happen.
At least the SaaS industry seems to be very disrupted lately. There may be some more consistency in the value plays, but we'll see. if any of these names from our speed round can kind of, buck the trend, so to say. So let's go ahead and run through. So Sarah out of Miami, Florida wants to know, AJ, airlines, ticker, American Airlines, ticker symbol AAL, maybe not as disruptive or disruptive in a positive way so that our flights are more efficient.
I think American Airlines just opened up flights down to Venezuela, didn't they? I have been tracking American Airlines. I haven't kept up with my retracement analysis, but just by looking at it, it looks like we've got a little bit of a trend change that has occurred. So we're trending down after trending up, but American Airlines doesn't really move so aggressively. Let's go ahead and continue this just really quick and we can adjust, but we've got a little bit of a trend change that occurred, and I can see a lower high and a lower low. And I don't know what's happening here, but it looks like we're doing something like this. So a couple things you might think about here. I could see selling option premium. So you'd have to establish some sort of, whenever you want to sell options, you have to have something to cover it. And you could either cover it with a stock, whether it's long or short the stock, or you could cover it with a back month option. Usually back month deep in the money is the safest bet to cover selling a near-term option. And so if you wanted to do a selling play, I would recommend that we wait until we get, if we've got, for instance, this channel that we're in, I would wait and I would try to set up your initial covering position that will allow you to sell options when we're toward of this descending channel. So now is not the time an initial position. Also, that initial position could be a directional trade. So in other words, I wouldn't try to trade in this direction right now with the overall trend being down. I'd wait, and it's probably only going to be a week or two, and wait till you're towards that level of descending resistance. And once you're up there, when you get your reversal down signal, the stock, or you'd buy a deep in the money, far out in time put option. Now, if you are already shorted the stock, or you're already in a back month deep in the money put option, for instance, a couple of, whether it was here or here, if you shorted stock or purchased a deep, now you're getting a signal with even where we are today, where you want to sell your put premium. Sell protective puts to people. Sell them at like the $12 strike price. Expiring, I think February options are expiring. March options are expiring, I think the 21st of March. Sell those March 21 options maybe at a $12 strike price and collect that premium. This is the perfect time to be doing that. And if you want to, with the money you collect there, buy yourself a protective call option at $15 or something like that. Lock in some profits there, and that creates a collar. That's what I would do. I would not be putting on your initial covering position, but if you're already in an initial covering position, let's sell those puts to those people who are willing to pay top dollar for them.
All right, that's airlines, American Airlines, ticker symbol AAL. From planes to motorcycles. Brian from Milwaukee, Wisconsin wants to know, AJ, do we have any opportunities in Harley Davidson, ticker symbol HOG, HOG?
Oh, yep. I typed in the wrong ticker symbol. Let's
HOG.
HOG.
Oh.
Yeah. Oh. Huh. You know what okay, so I'm going to give you guys a little trick. So one of the things you want to understand, I'm going to open up just to Google. You know what? I'm going to give you guys a little trick. Google, don't underestimate Google, right? Google over the years has done things like with their whole being able to monetize search, monetize AdWords, AdSense, being able to monetize Google Maps. figure out. And the good thing about Google is they are such a behemoth. A lot of their tools that they offer in order to, get people to use them, they offer them to you at least monetarily for free. You probably have to give up your personal information, but that's another story. Most people don't know that's happening, like in Google Maps. Google has incorporated their AI right into the Google search. So you can ask a question. So let's ask Google really quick, what sector is HOG in, right? If I wanted to track that sector, how could I? And you could just type that in, because now their AI, right, Gemini, will actually, if you come on here, usually you can get, if you ask a question, maybe I asked too many questions. Let's go ahead and just we'll
you
keep the
gotta hit
second
the
question
AI mode.
for right after. Well, let's just see if we can do it right here. Yeah, maybe. Sometimes it'll come up and AI will come up, but yeah, let's how do I do AI mode? Let's see.
Well, just go back to
what
the
sector?
home, the initial screen.
Okay, let's do it. Let's just go to google.com. I'm gonna copy that question in. Sometimes the AI mode will come up right in search. I don't know how to trigger that, but let's go back, and SIP is actually the google.com. Right here.
Just, instead of hitting the search, paste the question in and then click that.
Okay. And so, in case you're wondering, so we're in the consumer discretionary sector. So now we paste in the second question, right? Would you like to see a comparison against its peer? Oh, well, let's just, because it's asking us if we'd like to see that. And I'll just say, yes, I would.
You could just say yeah.
Like to see a against his peers, and I'll put a period at the end. You're right. I like talk to
Hey,
it like it's
we're all learning
Okay.
AI on the fly.
Yeah, right. But I want to see a graph. So let's see. Deep value, Harley Davidson, Winnebago, Polaris. So it's kind of showing you this. Is there a ticker I can chart to show the sector HOG is in? And so it might ticker that I could put into my consumer discretionary. Okay, here we go. XLY. So do SIP. I like to take HOG, right? And in all your charting packages, I'm demonstrating on Thinkorswim right here. I'm going to go to studies, and I'm going to go to add a study, and they all have this one that's called compare with, right? And you can put in your own symbols. So I'm going to go compare with, and the symbol I'm going to put in is XLY. And what you're trying to do here is see the correlation. Is there a correlation with the sector it's in, or is there not? Now look, the sector is going up and HOG is going down. So that gives us a good 2 cents. It's basically saying that investors are not treating HOG like, they're not treating Harleys the way they would treat anything else in the discretionary. They're not buying Harleys like they used to. In fact, they're saving their money from buying a Harley and putting it else into something else. And so that gives me some intel. And you could do this, by the way. You go over to the Google AI mode and you ask for any ticker, what sector it is. You overlay that sector chart on and it's usually an exchange traded fund, over the chart of your stock. And if you see that the stock is almost in lockstep with the sector, then you can actually, refer back and forth to the sector and get some insights as to what hog might do next. Whereas if you see the opposite, like we see here, you could start to see if if consumer discretionary is not matching HOG, you can come up with a different trading hypothesis. So my trading hypothesis is, you definitely don't want to be going long right now on Harley Davidson. I think that a lot of people are saving their money right now. Harley Davidson is like something you buy when you feel very confident about your finances. And I don't think people are feeling very confident about their finances right now. And so I almost want to trade Harley as a trend following a ticker, and I want to almost use a reverse swing trading strategy. In other words, right now, Harley Davidson is clearly trending down. When it's trending down, if we can measure maybe with some sort of leading indicator, like a Williams percent R or a slow stochastic, something like that. Remember, if we use the Williams percent R, and sorry, this show's going a little bit late. I'm getting too much into demonstration mode, but Williams percent R should be on 14. I want to find out when it is overbought, and overbought should be at a -10 versus -20 for what we're trying to do. So you're basically going to follow this on the Williams percent R down here, and whenever you get up here on the Williams percent R or up here above this -10 line, then you're going to look for a trade down. So a swing down. And I guess if we look up here at the last time that we were there, yeah, it went from about $21.40, and then the exit came about $19. So it lost about 10% of its value. That's, if you use a leveraged option on that, buy a put and then sell the put at the exit signal, that would not be a bad trade. You could, depending on your leverage, you could be walking away with, 20, 30% ROI on that trade. So you wait for it to become overbought, wait for a lagging indicator for your entry signal, wait for the lagging indicator to reverse for your exit signal. Typical swing trading. Right now, it looks like it's at the low of its downtrending channel. This is not when you want to do this trade. You want to swing when it's overbought and it swings to oversold.
Yeah, I'd be curious to learn more of why motorcycles are not selling as much. And maybe that's one of those consumer habit things that are changing where buyers just don't want to, unlike in the 60s or 70s or the 80s, where I think having a motorcycle was more of a trendy thing. So, it's interesting because I think this is a good U.S. company, manufacturing company. Just the consumer is not reacting.
And I think also what I've read is a lot of Harley parts, steel and aluminum, are being tariffed up the wazoo. So Harleys are even more expensive than they have been, and people just can't afford them.
Yeah. All right. Well, I think that'll, I think we'll have to save, Edmund's question for another episode, seeing as we're getting close here on time. All right, AJ, last day of the month. I believe I saw a headline this morning that we're actually negative on the year so far. Final thoughts heading into the weekend in terms of, what you're advising people.
I'm telling you, I am brushing up on my breakout strategies. I'll tell you, my breakout strategy is probably the one that is. I use a lot of conditional trading on breakout strategies. I use a lot of day trading strategies. And I say that because I don't like to be in front of the markets, but I think the markets are offering us no alternative. What you guys can do is you can actually go through and compare sector charts to the broad market and see what sectors seem to be immune to this current consolidation. and maybe, focus, if you don't want to do breakout and day trading strategies, on possible consolidation patterns. Maybe try to find those defensive sectors that are ignoring this. Otherwise, I think everybody needs to buckle up for a lot more uncertainty and a lot more breaks, and being able to trade breaks over like the next, I don't know how long, maybe 1 or 2 weeks. If not, gosh, it could stretch out for 1 or 2 months. It could stretch out all through the spring and summer. Who knows?
Yeah, and this weekend is going to be fairly interesting, given the geopolitical tensions that seem to be increasing. Heading into a Friday on a down market, I always find to be very interesting. But with that,
Always.
folks, yeah, right, because the crypto markets could stay open and everything else is going to be closed. All
Yeah.
right, folks, with that, I'm going to invite everybody one more time to head on over to AJ's Quick Links page. You can get access to all of AJ's goodies here. Show some love on the socials, get access to that free indicator suite, and become a member of the program so that you can get access to some of these really cool tools and things coming down the pipeline. With that, that's all I got, AJ. It's been a pretty exciting start to the year. Next week we'll be coming back and it'll be March. But that's all I got, folks. Appreciate you, AJ. Appreciate everybody tuning in. Please hit that like, hit that follow, hit that subscribe button, and we'll see you guys next week.
Bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.